to learn how to prepare a cash flow movement system, although it will also involve a bit of forecasting.
Okay.
Yes, sir. So let me just open that schedule. I believe you have a copy of the schedule. Do you?
Yes,
Remember
I
the
do have.
schedule? The schedule that I'm talking about. Okay. All right. Yeah. If you do, then okay. If you do, then that's perfect. I believe it's this one. Okay. So we've done customers, suppliers, credit sales. We've done purchases. The only thing, the bank reconciliation we've done, matching receipts and bank statement entries. We've done a comparison between our bank statement and our cash book. That's actually the that's actually the cash flow movement statement. It's actually the cash flow movement system, or I would say a simple bank reconciliation. I'm actually not the one who created this. This spreadsheet that I'm looking at, Mr. Knox, I don't know if you'll be surprised, but this spreadsheet that I'm looking at, guess who created it?
I guess it's Musonda. Is it?
Yes, she's the
Yeah.
she's the one who created it. So
Okay.
me, I just got what she created. You see, she even added a bit of some configurations. There's even a balance sheet in here. I believe there are a number of things in here. Let's see. We have an income statement. We have a cash book. I don't know if you have. See, the cash book even has configurations like
Yes.
audit fees and so basically she even used data validation. She used data validation, and I think she also used if functions. You've seen some if
Yeah.
assets
Yeah.
computer, then it should do this. Yeah. So we practically learned all this, and then she created this. Unfortunately, you were
Okay.
missing a number of our sessions, sir.
Yeah. Yeah. Very true.
Yeah.
Yeah.
This is what I wanted you to create as well when I sent that message in the group. When I said everyone should create this. This is what I
Yeah.
wanted everyone to create. Okay. Yeah. So we've talked about a number of things already. Okay.
Yes.
Uh, Combining a cash book, an income statement, a trial balance into a monthly report pack. This is something that we have done already because it's more like a single spreadsheet. That's basically what Madam Musonda did.
Okay.
Okay. I know she's trying to join right
Yeah.
now. She sent me a message saying she's trying to join. She's having a bit of some network issue. And then also understanding if functions, we have done it. Understanding some if we have. That's the reason why Madam Musonda was able to do it. VLOOKUP
Yes.
is the only thing that we haven't really done. Okay, creating a
Okay.
dashboard, we've done a bit of this, but we haven't done the charts and the summaries for business reporting. Let's say build financials for a small shop in Excel. This we haven't really done. Okay, so after we finish all this, we are supposed to go straight to statutory repayments and business taxation and the like. But
Oh,
to
yeah.
ensure that you actually get the best of this, we'll have to look at cash flows in details as well.
Okay.
Okay, we'll
Yes.
have to look at cash flows in details as well. By the way, I just wanted to mention something. There's something that I don't want you to miss. I don't want you to miss the payroll demonstration on Thursday because I
Okay.
want you
Okay.
to see what Excel can do.
Yes. Okay.
Yes. Yeah, I can show you right now because it's open, but I don't want to. I want you to anticipate it so that you see it on Thursday. But
Sure. No, no
for as long as you
variable.
put in effort in Excel, Excel can actually do wonders.
Yes.
Okay,
Yes.
it's at 17 hours. 17 hours perfect.
Yeah.
Okay.
It's
All right. So we'll have a session. It's an entire payroll system.
okay.
Okay. All right. So I want us to understand cash flows in details. Okay. Before we actually go to the lookup, I want us to understand cash flows in details, and then we link our cash flows to our budgets.
Okay.
We
Yes.
link our cash flows to our budget. If you want to do budgeting, I wouldn't recommend you do everything in a single sheet. Like this sheet is for reports, simple reports. I want an income statement. I want an assets register. I want a balance
Ye-
sheet. The reason why we are putting this like this is so as to ensure we have everything we need at our disposal in the same spreadsheet. Okay.
Yes.
But for us to make a proper budget, you know what a budget is? A budget is practically a forecast, a future forecast. You're like, okay,
Yes.
um, let's say in January, you're making a budget for 2026. In January 2026, let's say we make sales of about 20,000 kwacha. Let's say we make
Yeah.
sales of about 20,000 kwacha. We're not sure if we'll make this money. It's just an assumption.
Exactly.
It's an assumption based on the assumption might be based on current trends, depending with how you decide to make your budget, or
Mhm.
it might be based on possible future trends. Okay,
Yes.
or
Yes.
possible. In some cases, suppliers can give you their future rates. Like for instance, they're like, we'll be selling this at 50 kwacha. Right now, we're selling at 45, but when it hits
Yeah.
January, we'll be selling it at 50 kwacha. At least you know,
Ex-
even in your budget, you're like, okay, it's 55, it will be 50 kwacha. If you want to be,
mhm.
if you want to be on a safe side, if you want to be, sorry, I was just responding to Madam Chi. Okay. So Madam, she was trying to join, but she was getting an error. Internet is very, very bad. Okay.
Okay.
So yeah, you might have an actual price, and then you put it in your budget. So for us to understand budgets very well, we need to be comfortable with forecasting, making
Yeah.
future plans. Might be
Mhm.
based on current trends or information that you have at your disposal. There's one particular budget that I like, which is a cash flow budget.
Okay.
Yeah, there's one particular budget that there are actually types of budgets. Okay, you
Yeah.
can't really make a balance sheet budget. You can't, but you can't really make a balance sheet budget. But you can make an income statement budget.
Okay.
Okay, an income statement budget and a cash flow budget.
But yes.
Do you remember your? Oh, you're actually you're Mr. Knox. You are in the perfect subject.
Yeah, true. Management accounting.
Hello. I believe
Yes,
you
we.
recently studied budget.
Yeah, we did part of
Yes,
it.
yes. I had forgotten. I was like, oh yeah, you are doing budget.
Yes.
It is just a part of it. I think I have a number of recordings on YouTube and on Google Drive about budgets. I think I've done cash budgets or any other budget that you can think of.
Okay, okay. I think I need to find time and
Okay.
check on the, yeah, on the YouTube and see which ones you did cover.
Okay, or I can send you a link to my Google Drive. It will give you access to a number of videos that I've done already.
Okay,
My Google Drive has a lot of recordings compared to YouTube. YouTube is just short videos, but Google Drive it might be like a 2 hour session, an hour session. Okay, all
okay.
right.
Even
So
yeah.
I know we have types of budgets like sales. If you look at management accounting, they'll tell you things like sales budgets, production budgets. But me, I'm only focusing on two budgets. That's the income statement budget and the cash flow budget. An income
Budget.
statement budget is us estimating our monthly profit, our future monthly profit for a certain
Okay.
particular period. It might be for a 3-year period, depending with the trends. We estimate everything starting from our sales, our purchases, our closing stock, how much we're going to sell, how much will remain with each month, our taxes, or our expenses, or our other incomes up to the profit.
Yes.
And then when you talk about a cash flow budget, it's a budget that just shows you how much money you will have at a certain period of time. It shows you
Okay.
if your business is liquid enough. It will talk to you if your business might likely go into insolvency.
Okay.
It will
Yeah.
tell you if your business has enough liquid resources to cover up a certain period of time. It will also tell you if up to a certain period of time you can afford something. It can also tell you at what point you run out of cash if you stopped making any sales.
Okay.
It will practically tell you your business is going concern.
Yeah.
That's a cash flow budget. So that's the main one that I wanted us to look at. Okay, a simple cash flow budget. A cash flow
Budget. Yeah.
budget is, trust me, it's very complicated. It's very complicated in that it's for 3 years. Okay, so to be very complicated, and it might even take a number of maybe even 2 days, 3 days for us to actually create one. It takes time, and if we do it step by step,
Step by step.
it will
Yes.
take even some more time. Okay, but it will take even some more time. Okay,
Yeah.
so how does a cash flow budget work? How does a cash flow budget work? A cash flow budget will not really be like the way you do, will not really be like a cash flow statement. Okay?
Yeah.
Let's say, for instance, we're
Yes.
making a budget for 2026. Let me just show you something. Let me say January 26. Okay? Or let
Yeah.
me do this because I want my budget to be proper. We are in May. Let me make a budget starting June
June. Yes. Okay.
for 1 year. For 1 year. Okay? And then I just simply just pull everything up to July. Is it up to May? It
May.
will be 1 year like this, right?
Yes. Yes. That's a yeah.
It will be
May
like this.
20
I left this because I wanted to put the details. Okay?
years. Okay.
Yes. I left this because I wanted to put the details. So, how do we perfect it? If we want, we can make it a table, of
Okay.
which I don't think there's actually a proper reason for us to make it a table. Do you know how to make it a table, sir?
Yes. We can easily highlight the
Yeah,
columns
we can
and
simply do.
yeah.
Madam Chiwe, you are welcome.
Good evening, Mr. Kachaka.
I'm fine. How are you doing? Oh, by the way, Madam Chiwe, I
I'm
know you
fine,
are
thank
not in my
you.
group,
Good evening,
but
Mr. Nock.
I am. Hello?
Mr. Kachaka, sorry, I couldn't get you.
Oh, okay. I also don't get you. But can you get me now?
Yes, I can get you now.
Okay. So I was okay, and Mr. Knox has left. Mr. Knox.
And no, I'm following. I'm
Okay.
around. Mr. Ronald, I'm around.
Um. Okay. Madam Chiwe, I wanted to mention something. I know you're not in my WhatsApp group, Accountants Forum, but we have a session, a special session on Thursday at 17 hours where I'll be doing a demonstration of a payroll system that I created. It's a simple payroll system, slightly advanced in that it uses lookup, index, and also Excel macros. So there's a bit of some coding that I did in there, and Excel almost became like a little software. So it's very interesting. And I would like you to attend it. It's at 17 hours. I don't know how free at 17 you are on Thursday.
I am very free.
Okay, perfect. And then to add to our normal schedule, the schedule that we created, so as to ensure that everything is better, I've decided to add a cash flow. Not a cash flow statement, okay, not a weekly cash flow movement system, Oh, okay. Also, a weekly cash flow movement system. The cash flow movement system that I said I'll have to create for you, we'll actually do it together. Okay. The other thing that I want to add is basically a cash flow budget, like a budget forecast. In our schedule, we never really talked about a budget. It's not in our plan, so it might even extend a bit of some time. But I thought it's a necessary skill. It's something that people must know and people must utilize. Okay. So right now what we are trying to create is basically just a simple a simple cash flow budget for a period of 1 year. So we've started with we just started just now, June 2025, which is next month, because I want it to be more realistic. Because if it's starting next month, meaning we are more likely to have a more accurate opening balance for June, and we are likely to know our figures as well. Okay, and then we estimate our cash inflows and our cash outflows, and then in the process we'll get to know how much money will remain with maybe after May, or if we can afford to continue running our business, or if we have enough liquid resources to actually run our business. So that's the reason why I thought it's necessary for us to do a bit of some budgeting and some forecasting and some estimation to ensure that we might be able to actually use it for our various businesses. Okay, so this is what we are making right now.
Okay.
Simple
Yeah.
cash flow. Okay. Yes. Okay. When it comes to this particular
Okay.
spreadsheet, when it comes to this particular spreadsheet, uh, I usually have styles like, okay, I can do it like this or I can do it like this. I can have my opening balance on top, or I can have my opening balance at the bottom, depending with how you want it to be. Some people might have their opening balance at the bottom, okay? It will be opening balance, closing balance, you do a comparison, and then you even see your cash movement. The cash movement is simply a representative, it's simply a figure representing how much money you have lost in a month. A comparison between your total inflows and your total outflows. Okay? So which one do you want us to do? Do you want us to have our
Mm-hmm.
opening balance at the bottom, or would you like us to have our opening balance on top?
Let's have it
At the top, please.
at the top. Yeah.
At the top? Okay, so if we have it at the top, okay, then I'll probably start with opening balance. Uh, I'll have to change all this. By the way, formatting is very, very important. Just
Okay.
format all this. Okay, just change it to currency. I'll put everything to kwacha. Okay, maybe the process you can be knowing shortcuts as well. So Control+1 is a shortcut for formats. You can do your protection, filling, borders, everything here, including your numbering. So basically everything Excel formats is on Control+1. And then if you do Control+11, it will take you to Excel macros where you have to do a bit of some coding to add instructions to Excel. Okay, so then everything else like index, matching, if functions, is just you typing an instruction. You get my point, madam? Okay. So I'll just get currency. There's a shortcut here that you can just click. I don't know why I decided to use the long cut, but yeah, there's this. You can just click this and then it will show you, it will change everything to currency. So I'll change everything to currency. So the format is now currency. Okay, so we have our opening balance. Let's say we have an opening balance of 5,000. I'll be putting figures because I want to ensure that this is perfect. And for me to ensure that this is perfect, I will have to use 1 month as an example. So we have an opening balance. I'll include my inflows here. Mr. Lux, can you see my screen?
Yes.
Okay. Okay, so we have our inflows here. Our inflows is basically representing all the money we are receiving. So when we receive money, doesn't really matter what the money is for. It doesn't really matter what the money is for. We have to put it on our inflows. Like for instance, if we make a sale, we put the money here. Let's say we have received 20,000 kwacha. We'll put 20,000 kwacha here. If we get a loan, we'll put it here. So if we get a loan of 50,000, we'll put the 50,000 here. Okay, so that's what inflows are for. So you have your number of inflows and then you bring in your outflows. Okay, so you bring in your outflows and then our outflows can be things like wages and salaries. Putting everything like this is not very hard. Do you know what the most important thing is?
Yeah. Let me see which one.
What's the most important thing?
The formulas, I guess.
Okay, yes, the formulas, but also a proper estimation of everything. At least you shouldn't be very far from the actual.
Okay.
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 Yeah. Wages is very easy for you to estimate because you are the one setting it. It's probably the company setting it. So you might know something like, okay, our current wage is at our current wage total is at maybe 40,000 kwacha, but we need to employ like three more people. That's like a 15,000 kwacha if we're paying them 5,000 kwacha each, meaning it will be 55,000 kwacha. So you can estimate it, okay,
Okay.
based on your future plans. So it's very easy. Things that are very difficult to estimate, things like sales. Although sales you can also estimate based on um, the demand and how the market is behaving, and also your
Yeah.
marketing efforts. If you put in more marketing effort, you might even take your sales a bit higher because you're like, okay, we put in this effort, and the way things look, it seems these people will be coming to us to buy whatever we are selling. So yes, that can work. So let's say we have wages of about a total of 21,000. You can either put it as a positive. You can either put it like this. Let's say you have inflows, and then you can have net inflows here, and then you have outflows, and then you have net outflows, and then do a comparison which will show the movement. Okay, let me show you. Let me show you. Let's say net inflows. Net inflows will be us summing up everything. Okay.
Okay.
Aren't you wondering why I am not adding? Aren't you wondering why I am not adding the opening balance to the inflows?
Ah, let's see.
Aren't you wondering why I'm not doing that?
Is it because that is just our opening balance and it's coming from maybe the previous financial year, financial period?
Yes. So this is, yes, it's not an inflow; it's an opening balance.
Yes.
Yeah. Okay. So and then our outflows, we can put wages here. There's a stationery. Madam Musonda,
Is the opening balance an estimate as well?
in this case, since I'm just making this up, yes. And looking at the dates, if this was actually true, it might be an estimate because there might be a slight difference because this is June, unless if if it's a month that we've closed up, like for instance, we do for April, and then the opening balance for May will be an actual. So opening balance can only be they can only be not an estimate if it's an actual amount. But since it's in the future date, things might change. You might receive more money, or we might pay out money. So yes, it's an estimate. But it has to be a
Okay.
realistic estimate, an estimate that's close to factual. And then every single time, I'll have to show you this. Like every single time a month elapses, you can do this. You simply add a column for the actual and you do a comparison. Okay?
Mm-hmm.
Yes. Okay. So let's say our stationery is we spend 900 kwacha every month on stationery. So let's say we spend 900 kwacha on stationery every month. And what else are we spending money on? Mr. Knox?
Let's see. Can we add suppliers maybe? Uh,
Yes, we can. Yeah, we can add our suppliers.
okay.
Yeah, we can. So how much do we pay suppliers? Okay, so for the suppliers, we can group we can actually group our expenses. We can say operating costs, okay, our outflows. We can group them as per the type of cost. We can say like these are admin expenses.
Yes.
Okay, so these are admin expenses, and then we can even bring in operating costs.
Okay.
Okay, and then we can bring in our suppliers.
Yes.
Okay, so this will have to estimate as well. It has to be closed. Then there's some businesses, what they do, the way they estimate it, they base on the number of inventory they will purchase.
Okay.
Okay, and that will also be determined by the sales. Just for instance, they will need to know if they'll sell everything and what they'll need to buy. Just a rough estimation. So that will actually be affected by the demand as well.
Yes. Okay.
Or some can say supplier payments can be a certain percentage of this. Imagine you get this is 100%. Imagine this is 100%, and then out of this 100%, 20% is your profit. So 80% will be your supplier payments. You can just do this, multiply it by 0.8.
That's a 16. Okay.
Yes, but you can do this if you can estimate your profit based on your cost. You're like every single time we make this product, our total cost is this. So our total cost is 80% of this product. So we only make 20%, or 20% is your markup. If 20% is your markup, then your sale is 20,000, meaning the 80%, which is 16,000, will be your total supplier payments. Okay,
Yes. Yes. Okay.
right. So this will make more like a little income statement on its own, because you get to know your contribution. Since you're doing management accounting, I believe you are very familiar with contribution.
Yes, I did one is the other day before yesterday, and I think
Yeah.
I yeah.
Okay. Okay. All right. So it will give you your contribution. So basically, account for everything here. So we have our wages and salaries, our stationery. Let's say we are paying rent as well. I only put a few. Let's say our rent is 1,500. We'll put, or let me say 2,000. We'll put 2,000 here, and then we'll have our net in outflows. Let me just put it here. Let's say net outflows. Our net outflows will be, we'll add up everything, including this, which will give us 39,000. And I'll simply just get this particular format and put it right here. Okay, so we have our net outflows right here. And then uh, let me find the movement. let's see, net movement. So the net movement will be, let's see, so we have 70,000 of inflows.
Yes.
Yeah, so that's 70,000 of inflows. Let's see, we use the proper formula. So we have an opening balance plus this less this. Okay,
Okay.
so this will actually give us the closing balance. No, I don't want it to do this. I want it to show the movement. So let's say, okay, so let's say net inflows minus outflows
Yeah.
like this. Let me change it. Let me say I want it to, okay, let me say net outflows minus this. Okay, this is how I wanted it to be. Just a second, I just want it to make sure it's exactly the way I want it to be. Okay, okay, okay. So we have, then here we have our closing balance. Okay, so our closing balance, if our net movement is this, meaning it will have to, see, let's see, what formulas am I putting here? I want to make sure it's accurate. So this, we got 70,000 less. Okay, the reason why I did this, I wanted to see how much money we have lost from this.
Okay. Yeah.
So I did 70,000. I did 39,900 minus 70,000. Okay, let me just do it here. I just want to do the math again. I just want to make sure everything is okay. 70,000 minus this. Okay, it's 30,100. Okay. Okay. All right. Okay. Okay, let me just do this. I'll just do it in the proper way now. This minus this. It will only become a negative if you've spent more than your inflows.
Yes. Yes. Okay.
Yeah.
Yeah.
And then here we'll have we'll have the net movement plus the opening balance, which will give us the closing balance. So the closing balance will be 35,000. So this, let me do this. Let me just put a bit of conditional formatting. Not duplicates, greater than, less than, 0, like this.
Okay.
Okay, so you've seen what I did.
Yes.
Okay, I added conditional formatting. So imagine if we didn't have this 50,000, if we had 0 here, it will become this. It will show you that you've spent more than you
More.
had.
Okay. Yeah.
Yeah. So this closing balance will be our opening balance here.
The 35,100. Yes.
Okay. So you just continue. Yes. So you just continue just like this, just like this for all the months.
Demands. Yes. Okay.
Mhm. Yeah, and then you make a simple cash flow budget. And then imagine you had to do this for 3 good years. I'll show you how to do a comparison, how to compare, how to do your variance analysis after you make a budget. But for now, this is what I wanted us to do: learning how to make a simple cash flow budget. By the way, this
Budget.
won't show us our profit. It will only show us the closing balance after each month, how much money we have. And the closing balance must agree with the bank statement. Meaning, we
Oh.
are also
Yeah.
supposed to account for things like bank charges.
Yes.
You've seen it.
Okay.
So this is a simple cash flow. This is a simple cash flow budget. So just have to make sure that all these are accurate, all these are realistic. We have to look at forecasting in details, and then after we ensure that all these are realistic, we simply link everything to all these other months, and we can make this for year one, then we make another one for year two, and then year three. So we'll have all these three, and then every single time a month elapses, we create a column, and then we do a comparison, comparing the two to ensure that everything. We do a comparison to show the differences, like a comparison between the opening balances, a comparison between the sales, the loan amount, the net inflows, everything.
Okay. Okay, I see.
Yes, sir. Okay. So have you ever done a budget, like actual budget for your business?
No.
Okay. Um, are you going to try something like this?
Yes, yes. See something that I can try this one.
Yeah. So we haven't talked about an income statement budget, so we can just try this. I believe this is simple, and this is something that can help people. So we can just
Yes.
try to do this, and then afterwards we'll get to learn how to do a variance analysis in our budget. So for now, or for today, we're just learning how to create one. So
Yes.
hopefully today, or when you have some time, you can create one, and then you finish it up to for like a year. Because right now I've just done for a single month, so yeah,
Yes.
can finish it up for like a year, and then afterwards you send me your spreadsheet, and then I'll use your spreadsheet for a simple variance analysis via Excel, uh, using a cash flow budget.
Okay. Okay. No, that's clear. Then I just wanted to be clear on our opening balance, the 5,000 that we have there in the month of June. Why haven't
Yes.
why is it why is it not included as part of the uh, why haven't we included it in our formula on the net movements there? Is it?
Okay, because the net movement is the difference between the money we have received in the month and the money we paid. I want to see how, if I'm comparing our total inflows and outflows, I want to see if we've paid more or if we have spent more.
Oh, I see. Okay,
Yeah, so
okay.
that's the reason why I'm comparing our inflows for the same month and our outflows
Mm,
for that exact month, not the money that
okay.
came in.
Okay, I see. I see. Okay, okay, sure.
Yes, sir.
Okay, no, that's clear then.
Any other question?
Uh, do I have another question apart from that? No, I think everything is now clear.
Okay.
Then maybe
All
just
right.
on the
Yes, sir.
okay, maybe just on the figures. Are we getting the actual or getting the estimates?
Sorry.
On the figures,
The
on the
figures we are
amounts,
get.
are we getting the estimate or we are
Yes.
getting the estimate? Okay,
Yes, it's an estimate.
okay, no, that's clear then.
Okay. All
Yeah,
right, sir.
sure.
If there are no any